Okay, guys, I just wanted to hop on here to give you kind of a higher time frame look, tell you what I'm seeing, potential moves both to the upside and the downside, and to talk about AI just a little bit. I'm going to try and keep this pretty brief. So we're starting out here on the 1 month chart, and obviously we all were around for 2025, and the market ripped higher pretty much ever since April. So when I'm looking at this, I'm trying to find when was the last time that we had a good sweep on high volume. And you can see right here in this area, we had a nice sweep on high volume that sent us much higher. Now, the market has been consolidating quite a bit the last few weeks. And I've been telling you guys on X that tech in general has been consolidating / being sold off for smaller caps and more cyclical stocks since November. Okay, and that's why we've been seeing the choppy action. So staying here on the 1 month time frame briefly, when was the last time that we hit a good discount to give us projections? And what I see is this area right here was a nice little sweep of this tiny area here, and it sent us up. We got a nice reaction off 2 standard deviation projections, and I hate calling them standard deviation projections, but it's just what you guys are used to. I call think of them as measured moves, right? So the projections here, we got up to the 2 to 2.5. We got up to the 3.5 to 4 and pushed through. So when I see that, I'm looking at, okay, what's a bigger projection that I can use that's still realistic, because something like this has already played out. So in order to find that, you really want to look at when was the last time that we hit discount before the next wave of price action started. You can see in this area right here, we pushed up, hit two projections, and came back down to the 50% range of this price leg, which gives us nice discount on high volume. So this is a good area for you to draw more projections to target the next level of major resistance when you're up in sort of the all-time highs that we are seeing. So let's just move this over. Not that one. Let's move this one over to here. All right, guys. So now we're looking at from the top of this candle down to here. That was the last manipulation move down below these lows, down into deeper discount. And as you can see, we pushed up, we hit the 2 to 2.5 range, and now we have a 3.5 to 4 range that has not been hit yet. So when I'm over here looking at the markets, I'm thinking, okay, on the monthly time frame, and this, guys, this could take a month to get to, it could take 6 months to get to. But you always want to know what is the potential range and reach for the market on a higher time frame, where people are looking to actually put money behind a move and where people will be looking to take profits from a move. This area right here, the 3.5 to 4, is a nice area that I could see the market pushing to once price action gets flowing for 2026. If the higher time frame catalysts, when you think about trade in the Supreme Court, when you think about the AI bubble in general, when you think about Venezuela, when you think about China, Russia, if everything is conducive to a move higher, this area right in here is where I'm looking to get to. Now, this is the monthly time frame. I know almost all of us are day traders and short time 1 to 2 day swing traders, so I don't like to stay on the monthly time frame for too long, okay? So now that we have this level set, I drop down to, let's just say, the weekly. And we're only going to look at Nasdaq today just because, ES, the S&P 500, and Nasdaq have been moving a little bit differently. Obviously, we all know the Nasdaq is really tech heavy, and tech has been what has been selling off and staying stagnant since November, whereas the S&P 500 has a lot more cyclical stocks that have been catching bids since November and definitely throughout the first few weeks of January. So that's why you're seeing that big discrepancy, and why the S&P 500 seems to keep pushing higher, and why Nasdaq is hitting a brick wall. So now when we look at this, we have our monthly 3.5 to 4 in this range that we just drew. Now that we're at the weekly, and we'll drop down to the daily too, but when we're at the weekly and I'm measuring out the manipulation sweeps to get more projections, I'm always drawing different projections on different time frames. I love to see something like this, okay? We had the nice sweep. This area right here is the best sweep in recent memory when you think about the weekly and monthly charts, okay? The area that's over here, it's fine, it's good, but this is really the best sweep. When I can draw projections from right here, the high down to the low of the sweep that happened here on high volume, you can see the volume right here was very high. These are projections that I like to see. Now on the higher time frame, you will be drawing it from way up here, from the high to the low. That could give you the run for the entire year or the next 2 years. But when I'm looking at just this on the weekly, you get more realistic. Let me make this the correct. Here you go. You get more realistic projections. Now, guys, when you see projections that overlap like this, the 2 to 2.5 overlaps lower projections 3.5 to 4. That makes this area very, very nice to target. Coming out of consolidation, all of this price action right here is what you would want to think of as consolidation. And I'll talk about where we could move lower too, but when you come out of consolidation, you really are going to want to see an expansive move to the upside or downside. If you're bullish, you could be okay with seeing a sweep and quick rejection back up above consolidation. And if you're bullish, you might just want to see a blast up. And I want you guys to know where you should really be targeting if we just get sort of a blast up and not a move down and then higher. So looking at this, let me put some price levels on here for you so you can actually get the exact levels that we're looking at. So the first projections we drew, the level looks like 28,000. Let's just call it 285. The two standard deviations from the better manipulation leg that we saw in April, we're looking at 29,393. So there's gonna be a lot of people who are targeting, we could say 30,000 because 30,000 aligns with the 4 projection here. And then it also is in the range of the 2 to 2.5. Will the market blast up to 30,000 right away? Probably not, because they're going to want to play games. Everybody, once it starts getting up there, will be targeting 30,000, and they're going to do a lot of intraday dumps and pumps, and it's going to be chopping everybody to get to 30,000. So as the market pushes up, what I would be targeting is the conservative level of 28,000, call it 285, to hit this green line right here, knowing that we have the 2 level of 29,393 further higher. So we should expect the market to push to this green line. Let me just draw you an arrow. This green line, and then extend up higher to push into this green line, and everything above that would be gravy, okay? Extra stuff that you don't necessarily need to catch. So now that we're looking at, the 1 month and we're looking at the weekly, and we see where price could realistically gravitate to, let's drop down to the daily and see what we're looking at. So we're going to really just zoom in here on the daily. So I posted some stuff a little bit early, I think a couple days ago for you guys. When it comes to the daily chart and the 1 hour chart in those ranges, I'm looking at these levels here. Everybody who follows me, everybody pretty much, who's looked at anything related to fair value gaps, and pretty much everybody around the world is looking at this fair value gap that has not been tapped on the daily. I mean, everybody wanted it here and they were playing games. Let's see what the low is. 26,127.25. And the high on this candle was 26,118. I remember that day. A lot of people do. They were targeting the daily untapped fair value gap, and it just didn't hit it. 4 attempts. It was the most ridiculous thing I've ever seen, coming at this area here, coming back up here. They've been butchering people on Nasdaq and using that level as a way for them, in my opinion, to build orders. What I personally believe, being in the game for a long time, is that when the market wants to move higher, they find a level that everybody's trying to reach, okay? And the market will buy and sell. There are algorithms that are in the market, but then there's also real people, real institutions, and they don't want to make it too easy by letting people always hit these levels, right? So they'll manipulate price by knowing if a lot of the world, from retail traders all the way up to big institutions, want to see new all-time highs on the Nasdaq, not just the S&P 500. They want to see these gaps getting filled. They're going to let price keep going up, but all of their orders to push the market back down will come in just before that level. So it really frustrates everybody. Sorry for the sniffles. I'm a little sick, kind of always, because of my my kid, my toddler. He gets everybody sick all the time. They want to see people come in and tap these levels, want to tap these levels all the time, and they're going to be selling just before it, which frustrates you. It frustrates me, because as retail traders, we truly never know. And I don't care what anybody says online. I mean, a lot of these guys are just, they only show you winning trades, and it's hilarious what these guys do on X, that try and act like they know the market, what's going to happen every day. But we all expect this level to get hit, and nobody knows if it's going to get hit early right here or on this move up. Everybody expected the level to get hit, and then they come back down, and then on this move back up, they were like, okay, now it's definitely going to get hit. 99% chance. Bring it back down again. All of these pushes, people were all targeting this level and higher. Okay, so in all of this chop, orders have been accumulated. Okay, that's what I want you guys to understand. Orders have been accumulated to go higher, to go lower. It doesn't matter. They get accumulated for different reasons. So to keep a long story short, when I'm looking at the higher time frames, we have our nice clean levels up here. That would be very good to hit from an expansion, because we're looking at, let's just say 10%, right? The market moving 10% higher, which is, the average range of a market, the S&P 500 might be 12% in a year. This is something that we can see play out throughout the first half of the year, throughout summertime, if Nasdaq is able to catch a bid, and if the global climate stays positive towards equities. Okay, that's a big if, but this is the upside plan. So when I'm looking down here at the daily, and I'm going to go to a little bit lower into the 4-hour, we see this trend line here, and the trend line is over here kind of protecting the lows, or bouncing off of it. This is a trend line that a lot of people on X are watching as well. Now, the thing that's important to know about trend lines, to me, trend lines to me mean nothing, but after a trend line holds for 3+ touches, it starts to serve as a support level if you're looking, for upside moves, in a way that it's likely to get broken. Okay, because once people see this level as an upside support level to blast, it's more likely to get a flush and then push, because a lot of orders are stacked up here. I call it engineered liquidity. People call it low resistance liquidity runs. Like I said, the market moves up and down for a whole host of reasons. But when I see moves like this, naturally I'm thinking, okay, I would love to see some type of catalyst to push us down, to sweep a couple of lows. We're not talking about necessarily going down to the bottoms of the pit, but we want to sweep a couple of lows to catch a bid that would send us blasting up to these levels. That doesn't always have to happen, so you need to stay nimble. We could just push up out of here and go up, but let's think about what's coming up, guys. When you think about the Supreme Court and the tariffs, to me personally, that is the biggest thing that is happening in the near future. Nobody on the planet, except for the Supreme Court and the insiders that that kind of butter them up to get information, knows exactly when that data is coming out. People thought it was going to happen last week. People thought it was going to happen the week before. Now people are thinking Tuesday, January 20th. Until they release it, we'll never know, and the market will continue every day that the Supreme Court publishes that they're going to release potentially an opinion on on a case that they've been deciding. People are going to think, okay, this could be the tariff case. It could be the tariff case. Now, the reason I'm making this video is because I want you guys to be able to have levels for the volatility that will come in after the Supreme Court finally releases this tariff, nonsense, right? We have no idea if they're going to uphold it and say tariffs were legal, or if they're going to say, look, you got to cut that back. Okay. And then if you look at the research, there's a lot of people who say the market could go up or down regardless of what they say. There's no concrete plan of if they cut tariffs will go up, if they hold tariffs will go down. There's nobody knows. Okay. So one thing that I'm watching for the upcoming week is if they decide to release at 10 a.m. the tariff ruling, and if it's relatively clean, and by clean I mean they come out and say, hey guys, we are gonna cancel the tariffs back down. I think the IEEPA allows 10%, not this 20, 30, 40, 50, whatever Trump decides. So if they say we're gonna cut all those tariffs back, you can only do 10% using this framework for tariffs, and then also if they say something along the lines of we're not going to make you pay back money, it's only going to be moving forward, then that's a relatively clean ruling that could allow the market to pop. Okay. If they come back and say, hey guys, we are going to cut tariffs back down to the baseline, let's just say 10% that's allowed by this specific law. And then also everybody who was charged, all the importers who paid tariffs, we're going to make you pay them back. That will cause excess volatility that could really see things just sort of like, gyrate up and down. When I'm looking at this trend line, we have another trend line right up here that's kind of acting as resistance. Okay. Now this wedging pattern right around here is January 20th at 10 a.m. is right about here. Okay. So we have some nice levels to the downside and upside that we can say, okay, look, if the market it tried to break down here and got quickly bought up intraday, okay, this right here was 3 p.m., this big yellow, but it's, green candles for you guys, was intraday. So it dipped down, but it got quickly bought back up. It dipped down here, quickly bought back up, all intraday. If you guys can see us break down through this trend line and close below on the daily, that could signify that they want to potentially drop us lower, okay? And we're not talking about crashing the market at all. We're talking about lower for a sweep to go down however far they want to go and push back up. Now you might be asking, okay, cool. That's something that might be realistic. How far down can we go? I was looking at the EMAs. I've been using them a lot more recently, just to be able to hold moves longer and catch pullbacks at a level that's not necessarily like an ICT PD array. And they've been working pretty well for me. I like them. So let's look at the weekly chart again. And then let's look where these EMAs form. My favorite EMA personally, people like to use the 14, the 20, the 50, the 100. This right here is the 20. Okay, these lines that you're seeing from this particular indicator are the 20, 50, 100, and 200, okay? So on the weekly chart, you can see, let me just zoom out now that we have these up here. Ever since April, when we started pushing higher, we've been holding the 20 on the weekly. That's cool. We're in an uptrend. We all know that, right? Holding the 20 is really nice to know that you're in a trend that could potentially continue. I really like the 20. So if I'm thinking, okay, we came down here and tapped it very nice. We came down here, swept through it, but closed up higher intraday. Where could the market go on a flush down of potentially trade news, Supreme Court news, etc.? Well, some good levels would be right here. Let's just draw it. Let's say right here. We'll make it, just so you guys can know what the difference of the lines, I'll make it blue. This right here is the 20 EMA. We're just gonna say 20 EMA weekly. We'll put it on the left. Middle left. Okay, and then we'll also do a line right about here. Just to, this is aggressive, right? And this is the 50. So now let's look at how far that move would be, okay? Because you always need to know like the volatility of the market, how big the moves are to be realistic. So we're looking at the weekly chart. If price is right here, we can draw this down. a 2% move, which is very reasonable for a daily flush down. A 2% move, 500 points on the Nasdaq would get us down to the 20 EMA on the weekly, okay? Coming down a little more from current prices, a 7% move, which would be a dramatic flush down, would get us down to the weekly, okay? Do I expect the market to dump more than 7% from the Supreme Court ruling? Definitely not, okay? Remember back in April on Liberation Day, the market was popping up and down 5% a day, 3%. Everybody was looking at limit downs, limit ups, and all this nonsense. So coming down to the 50 EMA on the weekly is not out of the question at all, especially over a multi-day move. But it's not necessarily what I'm really looking for, but it's possible. Okay. So these are my two levels. One level down. Let's tell you the price: 25,166. You can call it 25,100 to 25,200. Okay, that range is nice. We're gonna draw a little box here, just to make our ranges, make it a little cleaner. So 25,100 to 25,200. This is our 20 EMA weekly. All right. We're going to extend it to the right just so that when I move it around, we'll know exactly what that level is. Now, down here, we're looking at 23,900 for the 50. Okay, so let's just say 24,000 to 23,800. All right, guys, and this will be our 50. So these are the two areas I'm looking for a flush down. Let me kind of zoom out, show you so you can see nicely. For a flush down, breaking our trend line that's been holding since mid-November, I'm looking for a flush down to the 20 or the 50 EMA, which would be a nice solid 2 to 7% move. I do not expect more than that. Now, the reason I like this is because now let's look at the daily. That was the weekly. Now we're at the daily. And look, what do you see, guys? When it comes to trading, all I look for personally is confluence. The reason all these systems win and lose trades kind of at the same time is because everybody's system is interpreting the same market in slightly different ways. When I can get a 2 standard deviation projection and a 20 EMA and a liquidity level or a higher time frame untapped fair value gap all aligned within let's say 15-20 point range on the Nasdaq, that's a really strong level to get a reaction, especially if there was a support resistance, a lot of bounces and touches of a level. All you want to do is stack these things up. There is no one system that dictates the market. Everybody's looking at things with their system, things that they feel like they can trust. So if you're coming down here and you see that the 20 EMA on the weekly aligns with, now keep in mind, this is the 20, 50, 100, 200. This one right here is the 100. So if the 20 EMA on the weekly aligns with the 100 EMA on the daily, we're going to just write 20 EMA weekly and 100 EMA daily. And this is a sweep down of a, kind of significant level here. Then I would like to see a potential flush, nice break of the trend line to sweep some liquidity to get us down to these levels, which would be a solid, 2%, 2 to 2.5%, and then hold this level. Now, keep in mind with the EMAs, you're not looking necessarily for a bounce exactly at that level. Oftentimes it happens. What you more so want to see is a wick that can wick through the level and then push back up. Or if it closes, it'll close just below the EMA, but then the next candle will immediately get bought back up. That's kind of what you want to see, okay? So I want all you guys to the downside to be keeping an eye on on these levels right here, primarily 25,100 to 25,200 with an extension for an aggressive, psychotic move, flush down below the entire thing to come down to the 50 EMA on the weekly, or more realistically, somewhere between the 200 on the daily, which is right here, and this much higher time frame low, and the 50 EMA on the weekly. So this entire range right here, which would start at the EMA and come all the way down to probably the upper end of our box for the 50 EMA weekly. This entire range here is where I'll be looking for a bounce if we got a mega flush down that was, really fast, really aggressive, and really scary. I'd be looking to put in some buys right here for the move higher, okay? But oftentimes when I see these engineered liquidities on a trend line, the market rarely flushes all the way down. Like I said, anything can happen, guys. The market rarely flushes all the way down. It'll flush down to sweep lows and come down into, near these lows, or it'll sweep down just to this level or right past it and go back up. So I want you to keep those levels in mind. And then when I'm looking to the upside, we have what, many support and resistance traders would call resistance. This area right here has been touched 1, 2, 3, 4, 5, 6, 7, 8, 9, 8 to 9 times this area has held. If you are bullish, okay, which over time I am bullish. I'm not bullish tomorrow necessarily, but I am bullish on this type of move up to our higher time frame zone here. If you're bullish, let me take off these EMAs. What I want to see, we talked about the downside. What I want to see to the upside is a break of this trend line here. And one thing that could really happen, honestly, on a Monday is the holiday MLK Day coming up. You could easily see a push back up to the upper end of or the middle end of this wedge, and then the flush, or here, and then snap higher. So I think it's kind of unlikely that we're going to get some mega dump on Monday when the tariff decision might come out on Tuesday. But keep in mind, just over the weekend, Trump put out new tariffs on on some of our NATO allies because he really wants to basically take over Greenland, for national security concerns. Some people say for rare earth minerals. It doesn't really matter. But he did put a new tariff on. So more tariffs are always potentially inflationary and negative. Honestly, they're net negative for the market in general. So it's possible you get a Sunday flush down because of the tariff news. We'll see what happens. But I know that I will be monitoring this wedge to see if we can break down. Then maybe on Monday we can retest and then flush down on Tuesday when the ruling comes out. Also, you want to keep in mind that the 2026 Open is at this price. We already came back, pushed down. Let me put up a little candle for you guys of let me see. I don't have it up there right now, but we pushed down to the year open and then we push back up. Something that's really important to monitor is if we push back down, can we crack below the year open? When I look at I'll talk about that in a second. When I look at this right here, which is, some of you guys believe in seasonality, some of you guys don't. This is just the past 20 years, looking at the average moves, right? January in general, and February, but January is positive roughly half the times, okay? And you can see we go up and we kind of chop around, and at the end of the month, we kind of come back down towards the year open. And then February, on average, all things being equal, on average, February, you could see a nice little pop and then pull back. And then everybody expects spring and March, springtime, summertime, March, April, May, June, you get that nice push up through summer. That's kind of the normal seasonality of just equities in general. So knowing that the market is relatively choppy early in the year, it makes me want to to think that, okay, I'd rather see a move back down for whatever reason, if there's a catalyst, to then send it higher at a future point in time. Maybe that future point in time is February. Maybe that future point in time is March. But we're not here to predict the market. What we're here to do is have our upper levels and lower levels. So this video is already going a little longer. I wanted to be brief, but to sum it all up, we have our very nice bigger trend line. Boom, 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 4 touches, 5 touches, always showing support, okay? If we can break this trend line with a closure on the daily, not a break and push back up like we've seen before. If we can break this trend line with the closure on the daily, look to target down to the 20 EMA, 100 on the weekly, 100 EMA on the daily, or simply the early January lows, okay? If we can do that, then potentially look for a bounce from this range right here up to, look for a bounce from this range right here up into the daily UFEG. Once you get above the daily UFEG, I don't care when it happens. I have no idea when it's going to happen. It could happen tomorrow or in 2 months. Once you get above the daily UFEG, we want to see this support, which is really, really, really resistance, which is really, really, really strong resistance, turn into support. Okay. So what that would look like is maybe we blast straight up, come up here like this. You do not want to see price blast above the daily UFEG for whatever reason, whatever catalyst, and then melt all the way back down through what should have turned into support and come all the way back down. If you start seeing that, guys, just get out the market for another few weeks. Go look at gold and silver and all the other nonsense, okay? After a level is tested 8 times, 9 times, that level needs to hold for you to see the continuation up to this area up here. So that's plan 1, is you break this little smaller wedge top, then you break the daily UFEG, then it holds as strong support, and then you guys can trend trade it, day trade it every day for the blast over, a few weeks. Who knows? And then the other flip side is you get the Supreme Court ruling, or you get some other catalyst, maybe more tariffs, war news, whatever. Price maybe goes up to the wedge top, comes down, closes below the wedge, retests the wedge, and then flushes down into our 20 EMA, 100 EMA level. And that's the conservative, guys. That's the conservative level for this higher time frame play. If they really flush it down for a 5% plus move, you're looking to come all the way down into these lower levels where you're going to see the 50 EMA on the weekly, and you're going to see the liquidity here that can get scooped up. Okay. And then from there, then I would want to see a nice, strong, high volume rejection that will send us up to these levels up here. I'll close the video with this. I was talking to you guys about TSM. That's a ticker for TSMC. They make all the chips for all these guys, and their earnings were really, really good. Their CEO was saying there's endless demand. Let's see what he said exactly. So he said, all in all, I believe, in my point of view, the AI is real. Not only real, it's starting to grow into our daily life. And we believe that is we call it AI megatrend. We certainly would believe that, the CEO said during the call. Also said, so another question is, can the semiconductor industry be good for 3, 4, 5 years in a row? I'll tell you the truth, I don't know. But I look at the AI, it looks like it's going to be like an endless, I mean that for many years to come. What he is saying is, they're building new facilities. They've already got, these facilities, guys, are massive. They're huge. They take years to build, hundreds of billions of dollars. They're building new facilities. The demand that he is seeing from all these companies to build his chips, like NVIDIA, etc., is extremely high. And he's over here saying he thinks it could be endless, meaning we're at the beginning of a mega trend. So you guys need to keep that in mind and understand that if we are at the beginning of an endless mega trend, then when you look at this chart and you're looking at the daily chart and the weekly chart, then guys, a little pullback, we pushed up hard, a little pullback to blast is not out of the question. My most optimistic projections are looking at the 1 month chart. We got all these levels here. My most optimistic projections that could play out over the next couple of years is, let me hide this one. I'm just gonna hide all these. Is a manipulation that we saw, if it holds, because you need the manipulations to hold for the projections to still be good. If it holds, we're looking at essentially 35,000. I want to see Nasdaq hit 35,000, which when you're looking at how far that is from current price, 35,000, we'll just say is right about 36%. Now, do you think the market is going to go up 36% in 2026? It's debatable, right? There's a lot of uncertainty in the market, but could the market go up 36% over the next 2 years? Definitely, easily. Could it go up 20% this year? It easily could, especially if kind of Trump gets in line with the idea that, these tariffs are just not really good for business, because the market for AI is extremely hot, but all these other companies are hurting a little bit because of the tariffs. And by other companies, I simply mean smaller caps, mom and pop. The general economy is hurting because of tariffs, but AI has been exploding because AI was going to explode regardless of tariffs. Okay, I hope you understand that. So if the economy in general can strengthen, then we can easily see the market for Nasdaq blast up to 35,000, which is my overall target, as long as these lows hold right here. And that's something that I'd be looking at over the next 12 to 18 months. If these lows get swept, then that invalidates these projections, and that means that there was some big shift in the global market to send the Nasdaq down 30%. That's basically, recession levels. And if you can predict that, then you should open a hedge fund. So guys, I'll leave you with that. I hope the video wasn't too long, but those are the levels I'm looking at to the upside and downside, and let's see how it plays out. Don't try and predict the market. Have a plan for the upside and downside. Wait for a news catalyst backed by technical analysis levels, and then enter your trade and execute. And we'll see how it goes. All right, catch you next time.